Hello students, in present video I am going to explain about 16th problem from depreciation lesson. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about depreciation topic. On depreciation I made 17 videos. Video links are available in the description box. Let us see the problem. On January 1st, 2017, Krishna and company purchased a second-hand machine for 65,000 rupees and paid 15,000 rupees for erection. They bought one asset for 65,000 rupees on 1st January 2017 and they spent 15,000 rupees towards erection charges. Erection charges means installation charges. When erection charges are given in the question, we should add that value to purchase price. Then asset cost comes. So machine cost is 80,000 rupees. Depreciation is provided at 10% under diminishing balance method on 31st March every year. We have to provide 10% depreciation under diminishing balance method, under reducing balance method, written down value method on 31st March every year. Means year ending date is 31st March. If year ending date is 31st March, year starting date will be 1st April. Means this firm is following financial year as their accounting year. Another machine was bought on 1st April 2018 for 40,000 rupees. Additional machine is purchased on 1st April 18 for 40,000 rupees. On 31st December 2019, the machine bought on January 1st 2017 was sold for 60,000 rupees. There are two machines and on 31st December 2019, first machine 80,000 worth asset machine is sold for 60,000 rupees. Prepare machine account. For how many years you have to prepare? No information is provided in the question. Let us see the dates first. They purchased 80,000 worth machine on 1st January 2017. If purchase date is 1st January 2017, then next March month falls in 2017 year only. So, first year last date is 31st March 2017. From this date, count 12 months. Then starting date will be 1st April 2016. So first year is 2016-17. In this year, they purchased 80,000 worth asset on 1st January 2017. So from when to when they use this 80,000 worth asset in first year? January month they used, February, March. Only for 3 months they use this first asset in first year. Come to second year. Second year starting date is next immediate date of this date, 1st April 17. Ending date is 31st March 18. In this second year, there is no additional purchase, there is no sale. So at the end of second year, we have only one asset. This 80,000 worth asset we have. And we use this asset for full year from 1st April 17 to 31st March 18. 12 months we used. So for 12 months we should provide depreciation on first asset in second year. Come to third year. Third year starting date is next immediate date of this date, 1st April 18. On that day they bought another asset for 40,000 rupees. Year starting date they bought. Therefore, this 40,000 worth asset they used from 1st April 18 to year last date, 31st March 19. Full year, 12 months they used. And the first asset is also they used for 12 months. So, at the end of third year, we have two assets, both are used for 12 months. Come to fourth year. Fourth year starting date is next immediate date of this date, 1st April 2019. And in fourth year, they sold this first asset on 31st December 2019. 31st December 2019 falls in fourth year. Fourth year dates are 1st April 19 to 31st March 20. First asset is used for how many months? They sold it on 31st December 19, no? Means from 1st April 19 to 31st December 19. April month they used April, May, June, July, August, September, October, November, December. So 9 months they use this first asset. For 9 months we have to provide depreciation on first asset in fourth year. When asset is sold, we should calculate profit or loss on that sale, no? So even that working notes also we have to show in this problem. And they didn't sell second asset. So second asset is continued till the end of the year. Therefore, on 31st March 2020, we have to provide depreciation on second asset. And second asset is used for full year. 12 months they use this second asset in fourth year. Let us show the missionary account. They bought first asset on 1st January 17, no? So debit side purchase date 1st January 17. When they buy any asset, we should write to bank account. They purchase this asset for 65,000 rupees. Then on the same day, they spend erection charges. For erection charges also, we should write to bank account on debit side. Erection charges amount is 15,000 rupees. Now 65,000 plus 50,000, 80,000 is the cost of the asset. First year last date. First year last date is 31st March 17. Credit side write down the date. On the day we have to calculate depreciation. So by depreciation account. On opening balance of the asset, we should provide the depreciation. Opening balance of the asset is 80,000 rupees. 80,000 rupees into 10% into, for how many months we used? From 1st January 17 to 31st March 17. 3 months we used. Therefore, provide depreciation only for 3 months. 3 by 12. One numerator, one denominator we should cancel. 3 ones are 3 fours are 4 ones are 4 2000. Then 2000 is the depreciation on first asset in first year for 3 months. Now find out the balance carried out. Debit total is more. So debit total 80,000 minus credit total 2000 is equal to 78,000. Balance carried down on credit side is 78,000. Put the total. First year is completed. Come to second year. Second year starting date is next immediate date of this date. 1st April 17 to balance brought down. Bring this value on debit side. 78,000. In second year there is no purchase, there is no sale. So first asset we used from 1st April 17 to 31st March 18. Full year we use this first asset. First asset opening balance in second year is 78,000. As this is diminishing balance method, every year we have to provide the depreciation on opening balances now. So on 78,000 rupees, provide 10% depreciation in second year. No need to write any months because asset is used for full year. 7,800 is the depreciation for 12 months on first asset in second year. Then find out the balance carried out. Debit total 78,000 rupees minus credit total 7,800. 70,200. Put the total. Second year is completed. Bring the balance to third year. Third year date is next immediate date of this date. 1st April 18 to balance brought down. this amount 70,200. This is the opening balance of first asset in third year on starting date. And in third year, they bought another asset now. So purchase date 1st April 18 to bank account. Second asset cost is 40,000 rupees. Write on that. Now come to last date of third year. On that day, we have two assets. Actually speaking, as both assets are used for 12 months, we can add these two values, and on total value, if you calculate 10% depreciation, that is enough. But I want to calculate depreciation separately. Why? Because first machine is sold in fourth year. Then again we have to calculate depreciation separately on first asset and second asset. Why that double work? Here only we will calculate the depreciation separately. So remember, in case of diminishing balance method, if there is any sale of asset, then it is better to calculate the depreciation separately even though two assets are used for 12 months. First asset opening balance is 70,200. On that 10% becomes 70/20. I am writing here 70/20 is the depreciation on first asset. Second asset cost is 40,000. It is used for full year. Therefore, 40,000 into 10 by 100. Second asset depreciation is 4,000. Then total depreciation is 11,020 rupees. Write down that in outer column. 11,020 rupees. Then find out the balance carried out. Debit total 11,200. 1,10,200 minus credit total 11,020 is equal to 99,180. 99,180 is balance carried out. Then put the total 1,10,200. Third year is completed. Now come to fourth year. Fourth year starting date is next immediate date of this date. 1st April 2019 to balance brought down, bring this value 99,180. In fourth year, they sold this first asset on 31st March 2019. So credit side, write down that sale date. When asset is purchased, debit side we are writing to bank. If asset is sold, credit side we have to write buy back. Why we have to write like that? In 8th problem of depreciation lesson, clearly I explained all these points. That video link is available in the description box. By bank account, they sold this asset for 60,000. 60,000 is given in the problem only. So write down that value, and up to sale date, we have to provide the depreciation. So in fourth year, from when to when they use this first asset? From 1st April 19 to sale date 31st March 19 they used. How many months they used? April, May, June, July, August, September, October, November, December. Total 9 months they used. Therefore, provide the depreciation for 9 months. On opening balance of first asset. Is it the opening balance of first asset? No. This is the opening balance of two assets. And we need only first asset opening balance. So what we should do? Separately we have to calculate that. I am showing that calculation here. In this 99,180, I need a first machine opening balance. Go to previous year. In previous year, in third year, first machine opening balance is 70,200. And in third year, depreciation on first asset is 70/20. I need this value. That is why in third year separately we have calculated depreciation on two assets even though both are used for 12 months. Difference is 63,180. On 63,180, 10% depreciation we should provide for 9 months. 63,180 into 10 by 100 into 9 by 12. One numerator, one denominator we should cancel. 3 3s are 9, 3 4s are 12. Now 6318 divided by 4. I am showing here 6318 divided by 4. 4 ones are 4. 2. Bring this 3. 4 5s are 20. 3. Bring this 1. 4 7s are 28. 3. Bring this 8. 4 9s are 36. 2. Now put point, add 1 0. 4 5s are 20. Then value is 1579.5. 1579.5 into 3. 3 5s are 15. 3 9s are 27. 1 28. 3 7s are 21, 22, 23. 3 5s are 15, 16, 17. 3 1s are 3 plus 1, 4. Now, where to put the point? After point, one digit is there now. In our answer also, before one digit, put the point. So, answer is 4738.5. After point, 5 came. After point, if the digit is 5 or more than 5, how to take the round of value? Add one number. So 4739. After point, if the digit is below 5, then you can ignore that digit. Then 4738 we should take. As after point the digit is 5, I am adding one number. So I am taking 4739. 4739 is the depreciation on first asset in fourth year for 9 months. When asset is sold, we get either profit or loss on that sale. No, that we should calculate in working notes. Leave some space and write down the heading. Working notes below this problem we have to do. Heading is profit or loss on sale of asset. Procedure is take the cost of the asset sold. 80,000 rupees. Take that value minus total depreciation. First year is 2016-17. In 2016 and 17, sold asset, nothing but first asset, depreciation is 2000 rupees. Take that value in inner column. Only first asset depreciation we need because we are calculating the profit or loss on sale of first asset. Second year 17-18. In 17-18 we have only first asset and depreciation on that asset is 7,800. 7,800 is the depreciation of first asset. In third year 18-19 we have two assets. Two assets total depreciation is 11,020. Don't take this value. In inner column, you can see the first asset depreciation. Take that value. 70-20. Fourth year, 19-20. In 19-20, depreciation on first asset is 4739. Take that value here. Add these four depreciations and write down that value below the cost. 21,559. Now, from cost you have to deduct this total depreciation. Then you will get book value. Book value is 58,441. Now, Compare this book value with sale value. 58,441 worth asset we sold for 60,000 rupees. Sale value is more than the book value. Then we got profit. When we get profit on sale, from sale value we should deduct book value. Sale value is 60,000 minus book value 58,441. Profit is 1559. When you get profit on debit side, you have to show that. Refer 8th problem for the explanation. Date is sale date. When we sell the asset, on that day only we get profit or loss now. Sale date is 31st December 2019. For profit or loss, we should write profit and loss account 1559. So first asset related adjustments are completed. Now come to second asset, 40,000 worth asset. It is not sold. So in fourth year, from 1st April 19 to year last date. Year last date is 31st March 20 now. Up to that date we used it. Therefore, we should provide the depreciation on second asset up to 31st March 2020. Write down the date by depreciation account. Take the second asset opening value. Opening balance of second asset is not 99,180. This is the opening balance of two assets now. Go to previous year. Asset is bought for 40,000 rupees. In third year, on second asset, depreciation is 4,000 rupees. From 40,000, 4,000 if you deduct, then for fourth year, opening balance of second asset is 36,000 rupees. So on 36,000, 10% depreciation we should provide for 12 months. As we are providing depreciation for 12 months, you need not to write any months here. Then 2 zeros, 2 zeros. If you cancel, 3,600 is the depreciation on second asset. See, in third year, I am calculating depreciation on two assets in inner column and total depreciation I wrote in outer column because two depreciations are calculated on same day on 31st March 19. But in fourth year, first asset depreciation is calculated on 31st December 19 and second asset depreciation is calculated on 31st March 20. As dates are not same, we cannot add these two depreciations in inner column and we cannot show the total in outer column. Separately, we have to show the depreciation amounts in outer column. Then, find out the balance carried down. Debit total is more. Debit total minus credit total. Debit total is minus credit total. Credit total is 68,339. If you deduct that, then the balance carried down figure will be 32,400. Put the total. Total is 1,739. Now, as balance carried down is there, for next year, you have to bring the balance. And in question, he is not mentioning for how many years we have to show the asset account. In that case, first asset is sold on 31st December 19 now. So, 31st December 19 date belongs to fourth year. Fourth year dates are 1/4/19 to 31st March 20. As there is no other information, we prepare this asset account up to 31st March 2020. So this value bring for next year and leave the problem. Next year starting date is 1/4/2020. To balance brought down 32,400. This is the opening balance of second asset on starting date of fifth year. So this is all about 16th problem from depreciation lesson. Hope this video is helpful to you. Thank you.